Welcome to The Explainer. Our goal here is pretty simple. We take complex topics and, we break them down so they actually make sense. So a massive new law just rewrote the tax code. It's the biggest thing to happen in years, and you're probably wondering, okay, what does this actually mean for me? Today, we're going to dig into exactly that. We're going to look at the nuts and bolts, the cause and effect of it all, and figure out what this bill really does. So here's how we'll tackle it. First, we'll get the big picture of this new tax landscape. Then we'll zoom right in on what it means for your personal bottom line. After that, we'll cover the new rules for businesses, look at the huge economic shifts this thing causes, and finally, we'll weigh the big trade-offs that are really at the heart of this whole thing. All right, let's dive right in. And first things first, you gotta understand this isn't just some simple little tax tweak. No way. This is a massive, comprehensive overhaul. It bundles together some really significant tax cuts with huge shifts in government spending. And on top of all that, it completely rewrites the rules on big ticket items like energy and border security. This whole thing was signed into law on July 4th, 2025. And believe me, its effects are gonna be broad and they're gonna be deep. We're talking about the most significant piece of tax legislation since back in 2017. And the changes, they're gonna touch pretty much every single household and business in America. Okay, so that's the big picture, but what does all this really mean for your wallet? Let's break down the specific things in this law that are going to directly affect you and your family's finances. First up, and this is probably the biggest one for most individuals, the law makes those 2017 income tax cuts permanent. I mean, look at this. Without this law, your tax rates were scheduled to jump right back up. So the main effect here, it stops a built-in tax hike that was about to hit millions and millions of people. And it's the same story for the standard deduction. That was also about to get smaller, but this law makes it permanent and actually gives it a boost. For 2025, it's jumping up to $31,500 for joint filers. That's a much bigger upfront deduction for anyone who doesn't itemize. Now, what about families? Well, the child tax credit was heading for a cliff. It was set to get cut in half, dropping from $2,000 down to just $1,000. This new law doesn't just stop that from happening, it actually increases the credit to $2,200. And here's the really crucial part. It's now tied to inflation, so its value won't just get eaten away over time. But that's not all. The law rolls out a bunch of other targeted deductions too. A really big one, especially if you're a homeowner in certain states, is the change to the SALT deduction. That's for state and local taxes. The cap used to be $10,000. Now it's been bumped all the way up to $40,000 for a lot of households. That is a huge deal and means direct relief for people in high-tax states. And check this out. This is something totally new. The government is creating what they're calling children's savings accounts. Basically, it's a new program to help build wealth right from birth. The government puts in an initial $1,000 for kids born in the next few years, and that money can grow tax-deferred for big things later on, like education or even a down payment on a first home. Okay, so we've covered the personal side. Now let's switch gears and talk about businesses. Because this law introduces some major changes, all designed to get companies to invest more in things like research and development. And one of the main tools they're using to do that is something called bonus depreciation. Now, I know it sounds super technical, but it's actually a really powerful lever. It completely changes the calculation for a business that's thinking about buying new equipment, machinery, or other big-ticket assets. You can see what was happening right here on this chart. This incentive was on its way out. It was dropping to just 40% this year and was going to be gone completely by 2027. Well, this new law hits the brakes and reverses course. It brings back 100% bonus depreciation and makes it permanent. The impact is immediate. It means businesses can write off the entire cost of new stuff in the same year they buy it. That frees up a ton of cash they can then use for other things. And what's really interesting is how this law also locks in a bunch of other key pro-business policies that were about to expire. We're talking about the 20% deduction for pass-through businesses, like sole proprietorships and partnerships. And it lets companies immediately write off their R&D costs. These are all really powerful signals designed to get businesses, especially small ones, to invest and innovate right here at home for the long haul. Okay, so we've got all these tax cuts for people and for businesses. The big question then is, how are we paying for all this? And that's where things get really crucial. Because the answer is, this law makes massive structural changes to national spending in our public policy priorities. This chart really lays out the central trade-off. To make up for the money lost from the tax cuts, the law calls for over $1 trillion in spending cuts over the next 10 years. And those cuts are coming from programs like Medicaid and SNAP. At the exact same time, it's increasing spending on things like the military and border security. And there's another huge shift happening here, and that's in energy policy. It's a total pivot. The law gets rid of hundreds of billions of dollars in tax credits for clean energy. Yep, that includes the popular one for electric vehicles. And instead, it rolls out new policies to actually promote fossil fuel production, using tax incentives and opening up federal lands. So, all of this brings us to the central debate, right? It's the key question you have to ask about this law. What are the economic goals they're hoping to achieve? And what are the very real financial costs that come with it? Let's just start with the bottom line number. According to the official analysis from government budget experts, when you add everything up, the tax cuts, the spending changes, the net effect is adding somewhere between $3 and $4 trillion to the national deficit over the next decade. And this slide really gets to the heart of the whole argument. On one side, you have the proponents who say these tax cuts are going to be a powerful shot in the arm for the economy. They project it'll lead to a higher GDP, create almost 1 million new jobs, and raise wages. But on the other side, you have the counter-argument, which focuses squarely on the fiscal reality, that the drop in tax revenue, even with the spending cuts, is just going to create a massive long-term hole in the national debt. And a major criticism you hear, which is summed up pretty well here, is all about who wins and who loses. The argument is that the law is tilted, that the benefits from the tax cuts mostly flow to businesses and wealthier people, while the spending cuts needed to pay for it all fall hardest on programs that help lower-income families. So in the end, that's what this law really is. It's a fundamental choice. It's a massive bet that cutting taxes to spur private sector growth will create so much new economic activity that it'll eventually outweigh the enormous long-term costs. It's a decision that, one way or another, is going to shape the American economy for a long, long